Well, inflation is not going to help their cause, right?
Yeah.
I mean, and that's not going to help the cause of lowering rates.
Sure.
So that could, I mean, this is why you hope it's temporary, because that could be a thing where we're not talking about that much right now because other things are happening, but that's a pretty big deal.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to the Market Moment. This is Matt here with John.
Morning.
Hope you guys are doing well. John, anything going on in your world?
Not much. Life is wonderful. Weather's getting better.
Yeah.
We, spring is around the corner. It looks like we might be done with freezing temperatures, which is fantastic. I wouldn't say that if I was on the East Coast or north, but it seems like we're good here.
And you're headed to Florida next week?
Heading to Florida next week to see both my sons. One's coming in for spring break from college. One's down there, and it'll just be a good time seeing some clients down there too, which is nice.
Yeah.
But yeah, looking forward to that. Hot 80s, sunshine, beach.
That'll be nice.
All that kind of stuff. Sounds good to me. What about your world? Baseball games? You're
baseball, chasing Bennett around on the baseball field. The girls around at dance and tumbling, and Charlotte's starting basketball. First year of basketball for our youngest. So,
and she's feisty, right?
She's pretty feisty.
Okay, good, because
it'll be fun.
Yeah, his kids are going to be in the professional sports at some point. So you might want to get on Matt's good side now while he's still humble.
Yeah. No, Charlotte, it'll be fun to watch her because she's competitive.
Oh yeah,
I know she is. For a little girl, like she is competitive, so it's gonna be a lot of fun.
It's kind of fun. And your boy Bennett pitched on the mound, which is so scary.
Yeah.
When you're young, how old is Bennett again?
He's 10.
Pitching, and like actually doing a good job doing that is so amazing, right? It's hard to. There's only a few kids that can pitch when you're that age, right? It's kind of fun to see him out there. That's
It
cool.
is fun. A lot of things to be thankful for. On a very kind of different note, going to talk about today, really just going to talk through kind of the everything going on in the Middle East, not from a political perspective or anything like that, but just like markets, like how is the market reacting? What are we, as we kind of look ahead, what should we expect historically speaking, and some of those things. So I want to start with this chart right here. I think it's a good reminder. Markets opened down big this morning. Dow's down over 800 points, almost 900 points, to use Lee's favorite way of referencing the market. I'm referencing the Dow with points.
Us over 50 understand the Dow.
But you have the Dow, the S&P, and the NASDAQ all down close to, if not more than 2% at the open. So the market's definitely reacting. Yesterday the markets opened down and then kind of rallied.
Yeah.
Ended the year, ended the day, on a different note. The VIX is spiking this morning up 20%. So definitely seeing some volatility in the markets. So anyways, if we look at kind of historically speaking, what could you – well, maybe that's not the best way to phrase it. I was going to say what could you expect. What have the markets done historically in other times of, conflict, geopolitical events? And so this chart shows going back to the Korean Wars, 1950, the forward 1 year S&P 500 returns after each event. So we've got the Korean War, the Cuban Missile Crisis, the Six-Day War, the Gulf War, the 9/11 attacks, the Iraq invasion, the Brexit vote, COVID-19, Ukraine invasion, and then it shows you the average. And if you look at all of those major geopolitical events, the average forward 1 year return is 14.2%, right? So markets have historically held up pretty well. The two kind of exceptions was 9/11, which you already had. Yeah. You were already in the midst of a market sell-off.
Yes, you were.
So 9/11 obviously didn't help with that.
Right.
But very different market environment. And then you had the Ukraine invasion. S&P was down 7.4% 1 year.
And that had a lot to do with not just that invasion, but also interest rates rising, other things. Yeah. I mean, like inflation. And
every one of these, there's other things going on.
Yeah, other things going on. Right.
But you have plenty of events like Korean War up 11%, Cuban Missile Crisis up 27%, COVID-19 1 year ahead.
Right.
Markets up 43.7%, the S&P 500. So I think it's good to kind of take a step back and say, okay, like geopolitical events, especially in the short term, you could expect that there to be volatility. Markets react, trying to figure out, okay, what does this look like? Is this going to be a longer event, sustained kind of conflict, which is kind of a lot of people's concerns right now, is just like, how long is this going to go on, right? Not wanting to get into another long-lasting war. And the market's just going to say, typically is going to say like, hey, in the short term, we're going to kind of start pricing some of this in. But then as more and more becomes known and things kind of settle out, typically, historically speaking, the markets come back and, kind of plow ahead just fine. So thoughts on all of that?
Well, I like all that information. The charting is great. I'd say COVID is a great example of why you should be careful not to panic in situations like this. COVID was a really big unknown on the market, and it was very scary, and the economy closed down. I mean, massive things happened then, right? That were pretty similar to 9/11 when the market actually closed for a week after 9/11. Like, there was some massive new things that happened in COVID. And somehow a year later, we were up quite a bit, right? After a pretty rough 3-month period after COVID started.
Right.
Now, this being an attack in Iran and it's a war, and it's, there are casualties. This is not just dropping bombs on a nuclear site or something. This is a big deal. So I look at like this. Even in COVID, there were stocks that did well because of COVID, right?
Sure.
You had like the internet stocks and the gaming stocks because people are at home playing video games or whatever. So just like that, when you have something like this, there are sectors of the market that will actually perform well, which would be energy stocks and defense stocks, right? So you could see those. So like not all the market gets beat up, right?
Sure.
So you have some sectors that could perform well. And then you have safe haven assets like gold hitting new record highs, U.S. dollar strengthening right now. Mm-hmm. So those are some effects from this kind of stuff. And then, of course, going back to oil prices and inflation, the energy stocks going up and defense stocks going up is on the positive end. The bad side is the disruption of oil transit through the Strait of Hormuz, which 20% of the world's oil goes through that strait, which is very obviously concerning. A lot of that oil, the nice thing about the United States, we're energy and independent, so we're not. It's not necessarily affecting us, but it affects the world, right? It affects the world prices, which affect us. What the concern there is like a long, ongoing thing would increase inflationary pressure, and that impacts corporate earnings. Like, so if it stretches long, then you could see things really affecting the market. But if it's short term, which I think I'm hopeful, praying it's shorter term, and for example, the Strait of Hormuz, if that gets where the green lights, the ships are going through again, right? And all is good. And it's a couple days, 3 days, 4 days of energy disruption. It's kind of like a hurricane in the Gulf, right? So that passes, we're fine, and it reboots, everything's fine. That is the hope. Now, the market sentiment, if the conflict is brief, the market impact will be limited, as a lot of the charts will show us, but also just in general terms, it's an overreaction right off the bat. People are nervous. And then if it's resolved sooner than later, which there is some hope in that, even though it's, they're not going to go down without a fight. But one encouraging fact is that Iranians worldwide are kind of cheering this on. And I'm hopeful that the majority of Iranians will help in this without it having to be America, Israel, having to continue to do this. Does that make sense?
Yeah.
I hope it's an internal fix. I don't know if that's maybe wishful thinking, but if it's brief, the markets will move right on past this, and it'll be a non-issue a month from now. But if it's lingering on for years and it becomes a massive deal where Russia and China start getting involved and so on, I mean, this could go the other way pretty fast too.
Yeah, there's I think long term, the market, long term, if this goes the way that that we want it to, then I think it's a net huge positive.
Yeah.
Right. I mean, you have a nation that comes out of this this totalitarian structure, that living in oppression, living in poverty, living in hyperinflation environment, and you open up a nation that with 90 to 100 million people that start living in more of a free, economy, that they can innovate, that they can grow, that they can prosper, that is a net positive for everyone.
I think so too.
Especially when it's a nation that sits on some of the largest oil reserves in the world.
Exactly.
Right, and you open up those markets where we're not having to put huge restrictions on them, trying to control what their ambitions are or are not. So I think long term, if this plays out and the Iranian people get the freedom that they want and so much deserve,
right,
then it's a net positive. In the short term, there's volatility, there's unknowns, there's markets reacting, trying to figure out what does this look like. And so I think the biggest thing, to your point, is just not overreacting in the short term. Having a plan. This is every event or cycle or whatever it may be is unique, but a lot of times, history kind of paints a picture of kind of how the market reacts on the back end of these kinds of situations. So who knows in the short term what the markets do, but over the long term, the long-term things still matter. Are companies still making money? Are they still growing?
Exactly.
Are they, and I think that's what you need to stay focused on.
And I think you hit a great point about the long-term effect of Iran becoming Persia again. Having that, they brought us so many technological advances from, I believe algebra was. I mean, I want to go. I'm not real happy about that person.
You're going back there.
Yeah, I'm going way back. But I'm just, and it's a rich culture, and and they've brought so much to the world, and they're not, prior to 1979, they were actually, prosperous.
Yeah.
And so what's
crazy is
that could help the
I've
world
heard
massively.
Events like this happen, you start learning a lot more about.
Yeah.
And I've heard people, and I don't know the details of this, but how in Iran before 1979, where they were more progressive than we were in a lot of ways. Having, like more women in government and more, and like all these things, and you're just like, that was before I was born, and so all I've ever known is the kind of the state of Iran as it has been over the last 40 to 50 years. So it's like, man, if it's possible.
It's
They've
possible.
Had it before, so anyway,
they've got a lot of work to do, as we know.
What do you think?
Anyway,
what do you think this does from the Fed's perspective? As the Fed starts looking at, because they've been cautious. There've been a lot of people, hammering them like, hey, you need to lower rates, and they've been cautious. They've been pretty kind of stuck on their ways of like, hey, we're gonna wait.
Well, inflation is not going to help their cause, right? I mean, that's not going to help the cause of lowering rates.
Sure.
So that could, this is why you hope it's temporary, because that could be a thing where we're not talking about that much right now because other things are happening, but that's a pretty big deal.
It absolutely.
Inflation, if energy prices, because you know how energy prices go, right? As soon as that happened, they spike just because that's what happens, even if it's not going to cause a massive disruption. As this disruption of Strait of Hormuz continues on and goes into weeks, or if it goes into months, then you're going to have inflationary problems. Mm-hmm. And it might start worldwide, but it will obviously hit the U.S. as well.
Sure.
And that's when the Fed is going to look. Now he didn't predict this, but
one more reason to say, hey, we need to stay patient.
Which goes back to, like, we have a new Fed chairman coming in. We know who it is in May, right? And they're going to follow the Trump guideline and that's why they were picked, of lowering rates. And now, if you put this in and we have, if inflation starts to creep back up, that's going to be a really interesting storyline in May.
Yeah.
Like, because if they do the wrong thing, that's where sometimes the Fed, we question what the Fed does, or, it's questionable. But lowering rates with inflation happening would be questionable, right? So that's going to cause some friction. Interesting stuff. Hopefully that doesn't get to that. I'm hoping this thing kind of resolves itself out. And basically the Strait of Hormuz is, to me, the most important part of this war. I know it's not on a personal note. The most important part is the people of Iran, but on from an economic state, it's Strait of Hormuz is the most important piece of this. That needs to be fixed. Even if the war drags on, that piece of it needs to be fixed, protected. Ships need to continue to go through there, or the inflation will be a massive issue.
Yeah. Yeah, there'll be things that we, in the next month or two as we look back, hopefully we're on the tail end of this kind of conflict by then.
Yeah.
But, that we just don't know today, right? It's so early in this that how everyone reacts and how the market reacts and the economic impacts is just unknown. But, the long and short, one reason I wanted to get on here today and talk about give you a little bit of a historical context of like all of these other events were huge events.
Massive at the time.
A lot of uncertainty.
Yeah.
A lot of fear.
Yeah.
When these events started to take place and when you were in the early innings of whatever was happening.
Yeah.
And time and time again, even in the years where it was negative, they weren't, it was like it would have been the wrong reaction to, make major changes or panic. Right. And the right reaction was to just kind of stay calm, stick to your plan. And so we'd say, especially right now, this time is no different. Right.
Exactly. I wouldn't make any panic decisions at all, but you're going to have people that do. And that's why there's a stat, the average American investor that invests fully in the market makes less than the market, but not because they're not smart or whatever, because they're emotional.
Yeah.
The emotional component of these type of events create emotional stress.
Sure.
But I also will say this on a realistic thing. When you look at your accounts and you see them going down day after day, it does weigh on you. I mean, it doesn't matter if it's you, me, or we're seasoned, we're supposed to know about all this stuff. But even we look at our stuff sometimes and be like, oh man, I don't like this, right?
Yeah.
It's a natural feeling to not enjoy.
And that's why we have processes and systems in place
Exactly.
to like not let us,
Exactly.
react how we want to. Because in the moments, doing something can oftentimes feel good.
Right.
Just because you feel like, okay, I'm at least taking action.
Yeah.
So one of the hardest things to do when you're invested is do nothing.
Yeah.
Anyways, our thoughts and prayers are with everyone
Yes.
involved. Obviously, all the U.S. service members, everyone involved, in Iran and Israel and the entire Middle East. Don't like conflict, but we hope that the outcome of this is, a net positive for everyone.
Yes.
Involved. So if you have any thoughts or questions on, what's going on in the market, what's going on in the economy, kind of as we look ahead, just shoot us an email. Leave us a comment. We'll be sure to kind of stay on top of this over the coming weeks as more and more develops and comes out. But we appreciate you guys watching and listening, and we will see you guys next week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com.